Hi there. I hope you're doing well after the long Labor Day weekend. Now, really marks the unofficial end of summer, and I wanted to touch base with you and give you a brief update on some of the important topics that we're seeing with the economy and the ways to be positioning your portfolio to possibly take advantage of that. So let's dive in. Let's start with economic and stock market risks. First and foremost, let's talk about the economy and some of the things that you may have been seeing recently. Now, you've probably noticed that gasoline and oil prices are starting to go back up, and it's not happening slowly either. Now, what's going on here is that there's some important aspects with respect to the economy, and there's a lot of different aspects of what that means for going forward with the demand as well. But why is this important to you? Well, it's right now that we're reflecting on how strong our economy has actually been. And this has been something different than we've been talking about over the course of the last number of months, and especially some of our predictions for the months to come. So here's the thing, with gasoline demand in the US at an all-time high, and in Europe it's at the highest it's been in a decade, well, we're really starting to see that there's really good demand out there that is helping with respect to the economy to help grow it, but also the flip side is a good economy is producing more demand. But on the other side here, the Strategic Petroleum Reserve was being used last year basically to help with that demand, to meet all of our needs, and that was the backstop plan. But it's been drained. So now the SRP is actually competing with all the crude oil refiners to replenish themselves as well. And OPEC is producing at levels that we last saw 25 years ago. So now it gets to be a little more complex, and global production isn't keeping pace with the demand. Now, the US is really only back to the levels it was 4 years ago, and Russia has actually stopped reporting production numbers altogether. So we have really no idea where we stand on just a worldwide production of oil. So that's something that is really starting to weigh on how much oil there is out there, especially with the high demand. And that leads into portfolio considerations. Now let's shift our focus to your investments, because we believe that investment management is a crucial element to your overall wealth plan. Now, what we've been talking about, you may actually have been noticing that oil prices have been hovering around that $83 mark for a significant amount of time, and this has been about a month and a half. Now, that $83 mark is a significant level, but here's also something to know. When prices are below that level for an extended period of time, it's actually mathematically more probable that the prices will start to decrease. But that's not what we're seeing as of today. So recently it actually surged above that $83 level, and it did so decisively. Now, this upward movement actually is something to think about here, because mathematically, on a probability basis, it suggests that there's a growing likelihood that energy and oil as an investment might continue to gain momentum. Now, on a broader scale here, the diversifying element to that, really the commodities of energy, oil, what it brings to your portfolio is something to be considering here. And when we take a look at the commodity index in general, which also includes agriculture, now you can start to see this as a diversifier, and it really can be a powerful tool to help manage risk and help capture potential opportunities that's really different than just the S&P 500. Now, again, this is something that you should be at least looking into as part of your own portfolios to make sure that the risk is what you want, and to make sure that's going to be right for you as well. But those are two opportunities that we're starting to see that as today, mathematically, there's greater likelihoods the prices could increase from here. And that leads to wealth management and advanced planning. Now we want to move on to wealth management here. Now it's not just about your investments. It's about your financial well-being. So here's a question. Have you ever thought about stress testing your wealth management plan? Now, it's like a checkup for your financial health. You see, the super rich regularly conduct what they call stress tests. And there's two important reasons for this: to avoid potential financial pitfalls and to ensure that they're making the most of every opportunity. Now, many investors fall into the trap of really piecemealing their planning together and only addressing one concern at a time without seeing the bigger picture. Well, we know the result: fragmented and disjointed financial solutions. So stress testing will actually allow you to view your financial situation holistically and ensures that your goals and objectives are met with the most appropriate and up-to-date strategies. Now, with a well-coordinated plan, all aspects of your financial life work in harmony and you're better set up for success. So with the many elements that we have talked about today, and you're contemplating your financial future, remember, it's not just about what you're doing today, but it's about what you're deciding is best for you for the future as well. Now, we're here to help, to provide some of that stress test that we were talking about, and really think of it as a second opinion as well, to help navigate this journey and to look at gaps that exist. If you have any questions or want to discuss your overall wealth plan, feel free to reach out, and we'd be happy to explore strategies to help you secure your financial future. Take care.